Hello, welcome to Smart Investing Market Insights. I'm Krista Das. Buy low, sell high. This is a phrase that every investor knows, but how do you know exactly what is low? My next guest said in the June issue of his trading research service, Red Zone Profits, that the market was overbought and to hold on to your money for the next 2 months. Christian DeHamer, welcome to the program.
Thank you, Krista. Glad to be here.
Chris, in light of the recent market catastrophe, are you still standing by your market predictions from June? Are you still a buyer or a seller now?
Well, on June 22nd, 2007, I released an article entitled Sell at the Top and Look to Buy in Late August. You can find it under the Article Archives button at the Red Zone website. If you took my advice and freed up some cash, you're looking pretty good right now as the S&P 500 fell 163 points from its top. I think we are at the bottom or as near as you can get for government work. The simple and most profitable investment philosophy is to buy fear and sell greed. There's a lot of fear out there right now. A Google News search for recession returned almost 10,000 hits compared to just 4,000 hits for bull market. The contrarian in me says that it's time to go long. The current subprime fear-induced sell-off is a clear buy signal. In fact, my favorite economist and funny man, Ben Stein, tells us we have nothing to worry about. And I quote, "Subprime is a mess, but it's a small mess. Subprime mortgages account for roughly 20% of the mortgages, even in the most heavily exposed states. About 20% of them are delinquent in some way. That's 4% of mortgages. Of these, maybe half or 2% will go into foreclosure. There will be roughly 50% recovery on sales of these. This is a loss of just 1% in the mortgage market. Some lenders have already made up many times over because of the hefty fees they charge in these deals. The context of the size of the U.S. financial sector, it's nothing." Thanks, Ben. In fact, we've seen these corrections before.
Yes, but how can we be sure that now is the time to jump back in?
Well, Krista, if you look at the last bull market of the past 10 years, corrections of 5% or more happened on 5 separate occasions, plus the big drop of 2000. However, right now this is the first sell-off of the new bull market, and it's just what we need to set up a nice bull run into the winter of 2008. The PE ratios on the S&P 500 are the lowest they've been in more than a decade at just 16.5, and yet the earnings on the S&P 500 are growing at double-digit rates. Times are good and U.S. equities are undervalued. I'm a seller when the PE ratio is higher than it was during the last bull market. In this case, that would be around 38. That means the current value of stocks would have to increase by 126% today. Without growth, without profits going up, I can't stress it enough, the S&P 500 is showing an amazing value right now. The uptrend from the bottom of 2003 is still intact. It's time to buy, buy, buy.
So which sector should we be investing in right now?
Well, Krista, it's a good idea to buy the strongest sector during any market correction. Over the last month, the strongest sector has been tech. Specifically, consumer electronics is up 14.16% over the past month. Times are good for the likes of PC makers like Hewlett-Packard, who reported quarterly earnings less than 2 weeks ago and announced that sales of personal computers jumped 29% in the third quarter over the previous year. The stock is up about 2% over the last 2 weeks. But shares of Garmin Limited, the GPS maker, are up 27% over the last month. Advantage Tech, a company that sells cable boxes, is up 17%. DTSI, a home cinema company, is up 24%. And a recent IPO, VMware, has more than doubled since the software maker's October 14th IPO. It's up from $29 to $69 per share. Face it, tech doesn't use subprime mortgages, and all this money that used to be in subprime mortgages has to go somewhere.
What about commodities and oil?
Well, Krista, I remain long and strong in oil. China, India, etc. continue to pump demand. A chance hurricane could put $10 on oil overnight. It's also the natural hedge against the falling dollar. As for commodities, they've been overblown. The speculators blew the top off last month, and they're off about 35%. It's a bit frothy for me at this point. My advice, unless you're really adventurous, My advice for the fall is to stick with what made it through the correction unscathed. Winners win. Growth is your friend. The S&P 500 is undervalued by any valuation matrix. So is the dollar. U.S.-based tech exporters will do well going forward.
All right, you heard it first. Buy, buy, buy. Thanks, Chris.
Anytime, Krista.
If you would like to learn more about where to put your money, you can find Chris's investment research and his trading research service, Red Zone Profits, at taipanfinancialnews.com. Thank you for watching. Until next time, here's to great profits from smart investing.